Hey everyone, welcome back to TipRanks. My name is Julie, and today we are taking a look at the latest shakeup on Wall Street that has everyone on edge. Today, we're diving into three sectors and specific stocks that are feeling the effects of President Trump's latest tariffs. So let's get into it. Alright, guys, I'm sure you are all well aware that last night President Trump introduced a sweeping set of reciprocal tariffs targeting countries based on their trade imbalance with the US. These tariffs range from 10% for countries like the UK, Brazil, and Australia to a staggering 49% for Cambodia, with heavy hitters like China coming in at 34%, Vietnam at 46%, and Japan at 24%. These tariffs, effective immediately, aim to level the playing field, but they are sending shockwaves through the global markets. Today, we're going to take a look at three sectors feeling the effects, including consumer stocks, tech giants, and automakers. We're going to break down what's behind the decline and, of course, how some Wall Street analysts are weighing in. Just before we dive into all of this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can follow along with these stocks over on the TipRanks website or by downloading the TipRanks mobile app, which you can do so by following links in the description down below. We're going to kick things off with the consumer sector, where stocks are feeling the heat, with companies like Skechers, Crocs, Nike, Lululemon, and Target all falling by double digits. Why the big drop? Well, many of these companies heavily import a lot of their goods from some of the countries facing the highest tariffs. Take Nike, for example. In 2024, they produced 50% of their footwear in Vietnam and 26% of their apparel, and Vietnam is now facing that 46% tariff. The Nike stock is down 23% year to date and down over 11% just today. Lululemon is another company that is vulnerable here as well. They source about 40% of their products from Vietnam and another 17% from Cambodia. Cambodia is facing a 49% tariff. Their stock has fallen 33% year to date and is down over 10% today. This big increase to costs are going to squeeze these retailers' margins, potentially force them to increase prices, which could hurt demand. We've already heard from a couple analysts on Wall Street weigh in just today. An analyst from Evercore said that the Trump tariff plan revealed yesterday puts a much higher tariff burden on softline brands than we expected. While a roughly 21% incremental China tariff is bad, Vietnam is a bigger sourcing hub, making the 46% tariff on Vietnam a far bigger issue than expected. They view Gap, On Holding, Lululemon, and Deckers as the worst position, and said that Nike has a lot of issues to solve to turn around its brand right now, but that the company has the best chance at negotiating a deal with the Trump administration as a big U.S. employer. Now, moving over to the tech sector, which is also in the crosshairs. Looking at the Magnificent Seven, all of them are in the red today, with Apple, Amazon, Nvidia, and Meta leading the pack. Apple is a prime example here, as the company assembles a lot of their products in China, which is now facing a 34% tariff, and that is a direct hit to their production costs. The Apple stock has fallen over 18% year to date and is down 8.5% just today. An analyst from Morgan Stanley estimated that these new tariff costs could add up to over $33 billion annually for Apple. We also have our leader in AI chips, Nvidia. They rely on Taiwan's TSMC for production, and Taiwan is getting hit with a 32% tariff. Down 23% year to date, Nvidia is currently down 6.7% today. China is also clamping down on U.S. business investments in response, which could further complicate things for tech giants with exposure to the Chinese market. Wedbush analyst Dan Ives just weighed in on both Apple and Nvidia. He noted the jaw-dropping reciprocal tariffs in both China and Taiwan, and noted that tech stocks will be clearly under major pressure on this announcement as the worries about demand destruction, supply chain, and especially the China-Taiwan piece of the tariffs. The firm added that it will be speaking with companies and investors globally over the coming days to get a better grasp on some of the details and scenarios to navigate this new world that Trump just created. And the automaker sector is also feeling the pressure today, with companies like Stellantis, Tesla, Ford, Toyota Motors, and GM all in the red. On top of these reciprocal tariffs for specific countries, it was previously announced that there would also be a 25% tariff on auto imports. Currently, 1 in 5 vehicles sold in the United States is imported from either Canada or Mexico. Take General Motors, for example. They're down 13% year to date and nearly 4% today. They source 22% of their vehicles from Mexico. And Stellantis, who's down 8.7% today, sources 23% from Mexico. And today, Stellantis announced that they will be stopping production at 2 of their plants in Canada and Mexico for 2 weeks while they assess the impact of these new tariffs. With all of this tariff news, one analyst from JP Morgan said that it may lead to a recession, saying that they believe the large 20% tariff imposed on the EU represents the most significant incremental shock to the global outlook. If implemented, the effective U.S. tariff rate will likely approach 25%. It views the full implementation of these policies as a substantial macroeconomic shock, and these policies, if sustained, would likely push the U.S. and global economy into recession this year. While others on Wall Street think that these tariffs might be more short-term, and in that case, this big sell-off could be a great buying opportunity for the long term. Let me know your thoughts. Are you buying the dip today, or do you think there's more downside ahead? I always appreciate hearing from you guys in the comments down below. Of course, keep in mind that this video is never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a great day. I'll see you back here next time.